Hey there, everyone. Happy holiday season. This is Dave Keller here at StockCharts.com. Welcome to our year-end special series, the top 5 charts of 2023. You know, the end of the year is a natural time to sort of look back, reflect on performance, review how things went, look at some of your good decisions, some of your less good decisions, think about what you can learn from it. One of my previous mentors, one of my bosses actually at Fidelity used to say, "What did you learn and what are you going to do differently?" 2023 was one of those years where I feel like we all had a lot to learn. There was plenty of volatility until there wasn't. There were plenty of leadership changes, certain dominance of certain sectors, and then all of that sort of flipped around as the year progressed. So at the end of the year, looking back at the previous 12 months, really focusing on some of those actionable ideas, thinking about how you can improve your decision making in 2024 and beyond. I think that's a really valuable exercise. So today we're actually going to talk about our first of our top 5 charts of 2023. Before we get to that first chart and show you what it means and some other supporting evidence, I do want to remind you this is a perfect time to renew your Stock Charts membership. Go to stockcharts.com/special for more information and check out this promo. Don't forget to have your phone ready. There's a QR code you can scan to get a special deal right now. Here it is. There we go. Stockcharts.com/special to get the special holiday edition of the membership. I would encourage you to check it out. Really, there's no better time to subscribe to Stock Charts. A premium membership really gives you a lot of great opportunities to identify opportunities, to manage your portfolio using the great tools and resources of stockcharts.com. So make sure you check that out today. Let's get to our first of the top 5 charts of 2023. Might be an easy one to guess because one of my mentors, Ralph Eckenpour, always used to say, if you have nothing else than a chart of the S&P 500, start there, and that's what we're going to start with. The daily chart of the S&P 500 is what we're going to talk about as the first of the top 5 charts of 2023. And obviously, it sort of speaks for itself, right? The S&P 500 is the market, but at the end of the year, looking back at how this year actually progressed using the chart of the S&P 500, I think that's where you can really appreciate how the year actually played out. One of the things we'll talk about probably occasionally in this series, the top 5 charts of 2023, is this thing called hindsight bias. That is a behavioral bias where you often tend to think that your performance was a lot better than it actually was. And another way to say that is as things get further and further in our rearview mirror, our recollection of our success, our recollection of our hit rate and our performance becomes better and better, right? And I think that's a way that our egos sort of are nurtured, right? We sort of think that we did better as time progresses. So here's sort of the reality check on that hindsight bias. Let's focus on what actually happened through the course of the 12 months. What I thought we could do actually to think about the chart of the S&P 500 is really look quarter by quarter. If you think about the market in 4 different quarters, 4 very different quarters, to be honest with you, right? The first quarter is more of a consolidation period, more of an initial reaction after the rally off of the October 22 low. The second quarter was really a full rally phase as we accelerated, made new swing highs, and started to talk about the prospect of a new all-time high and what that might mean. The third quarter is where we had the big drawdown, right? A 3-month pullback that really changed the character of this market very quickly. In the fourth quarter, we had the bounce off of the October lows, threatening new all-time highs. And as we're recording this here in mid-December, 4,800 all-time high, very, very close, right? 1% to 2% above current levels. So let's go through each of these quarters one by one, just talk about how the charts evolved and what sort of tools you could have used to better understand these markets, to better anticipate changes. So the first quarter, right, as we look at year-end 2022, we had really had that initial pullback off of the October 22 low, right? 2022, obviously a very bearish year. The low ended up being October, and certainly appears like the low for 2023 is going to be in October. So there's a theme there that you may have heard about before that is playing out brilliantly with major lows in October the last couple years. But if you think about how we started 2023, it was in a pullback, right? And I remember as we were going live with our first shows of the year, the question was, is this just the next leg down, right? We're talking about new lows in the first quarter and what that might mean. January ended up actually being quite strong. One of our guests this year, a couple times, Jeff Hirsch, and I would encourage you to go back to my conversations with Jeff. We talked with him back in September of 22. We talked with him a couple times during the course of 2023, and overall, the markets followed the seasonal tendencies of a pre-election year very, very well. A strong January, there's a thing called the January effect, where basically a strong January usually means a strong year. That played out really well this year, right? So one of the first, I think, tells in 2023 was that strong January, right? After a pullback in December, we're thinking about retesting 3,500. We rallied and we actually made a new swing high. So by mid-February, it actually had already made early February, we'd actually made a new swing high for the cycle off of the October lows. January ended up being an incredibly strong month after a very weak December. So that was a little bit of a taste, a little bit of an appetizer to the meal of 2023, which ended up, of course, finishing for the most part in a position of strength. Now, as the first quarter progressed, we retested that December low, and I think 2023, when I look back, is a masterclass on support and resistance levels. Indeed, one of the reasons why this show is called The Final Bar is when I'm teaching technical analysis to new traders, to new analysts, I always say, start with the final bar, start with the current price and look to the left, right? And look at which levels stand out to you. And if you would have done that along the way in 2023, overall, you would have been in pretty good shape. There are a couple sort of misses, and we'll talk about that October low here when we get to the fourth quarter. But back in the first quarter in March, it made a ton of sense after the market made a new swing high that there was a bit of a pullback. It made even more sense to me that we retested those December 22 lows and held them. That was around 3,800. So that green shaded area remains on my S&P chart today, even though that's well below. It's about 100 points below the current price action. Overall, that really served as a key support level. So the first quarter for me was all about a strong January, was all about testing support that held, and how the end of the first quarter was really about being at the upper end of that range. The second quarter, April, May, and June, really ended up being one of the strongest periods until the fourth quarter, which has been kind of lights out to the upside. But until then, the second quarter certainly very, very strong. The beginning of it, though, was still a bit of a question mark. And again, going back to that theme of support and resistance, it's all about where we're at relative to where we've been. So I was not surprised, and we rallied off of that support in March, that we traded back up to the February high. And that held for actually about 8 to 10 weeks, right? So we first reached that level in April. We tested it a number of times. That's sort of this purple shaded area, around 4180 to 4220, we'll call it. And that's the February peak. A couple other peaks that were tested. And that shows you how at the end of May, beginning of June, we actually gapped above 4,200 and continued. So by the end of the second quarter, which is here in June, we're actually in really good shape. We have now made a new high for the year. We're well above resistance levels. So as you look to the left, we keep eclipsing those previous highs. We're making higher lows. And again, one of my mentors, Ralph Eichenborg, would always say in an uptrend, it's less about making new highs. We kind of assume that that's going to happen. It's all about the lows, right? When we pull back, do we keep making a higher low? And if so, then things are just not getting that bad, right? And I like that sort of thought process of a market being innocent until proven guilty. And I think that's what the second quarter was really about. By the end of June, by the end of the second quarter, we're in a position of strength. We're talking about 4,600, 4,800 all-time highs. I remember putting out some surveys around then saying, what are the chances the S&P makes a new all-time high before year end? Still an open question, but getting closer and closer here in mid-December. So the second quarter, a story of strength. Let's go to the third quarter, right? When you look at July, August, September, this is really more of a topping period. This is when the head and shoulders top really materialized, right? So we had a high in June, a much higher high. This ended up being a significant resistance level around 4,600. Then we pulled back and had this rally. And the problem for the market right about here is all of a sudden you have this very classic head and shoulders top, a high surrounded by two lower peaks, a well-defined neckline, which are the interim lows between the heads and the two shoulders. You can see we broke down through there in September. So by the end of the third quarter, this felt like a pretty ugly market. And I vividly remember the end of the third quarter and thinking this could be a really ugly fourth quarter because we've broken down through the neckline after a well-defined head and shoulders top, a trend line connecting the October 22 low and the March 23 low lines up pretty well to where we were here in September and then into October. But by the end of September, we're actually testing that trend line. And so that big, thick green line was a really important one that I remember watching and thinking, okay, as long as this holds, things aren't getting that bad, but it doesn't seem like it's probably going to hold. So the third quarter was really about the top here. One of the things that I will mention as we get to the fourth quarter is just the height of this pattern. One of the basic premises of technical analysis is that a height, and certainly price pattern analysis, is that the height of the pattern is very, very important. So here we have about a 6% range from the head in July to the neckline. If you take a similar measurement down, that gives you a downside objective around, we'll call it 40.80. So as we get to the fourth quarter, should I be surprised that the market bottomed out within a couple points of that downside projection? No. And I would say if you think of measurements like this as precise tools like an engineer, I think you're missing. I don't think that's how they're the reality of how markets actually tend to play out. So given some wiggle room, thinking this is more like a 5 to 7% downside projection given the height of the pattern means this actually was a perfect sort of measurement. Given the height of this pattern, that's about where you would expect a decline to go. So the fourth quarter really started with us basically reaching the downside objective as defined by that head and shoulders top, finding a significant low. And when you think about it, one of the basic market maxims that Yale Hirsch, founder of the Stock Traders Almanac, promoted was this, sell in May and go away. And that's something that had been around for quite some time. But I think Hirsch's work really elevated that as one of the commonly held market maxims in the industry. Part of that is that there's usually a major low in the third into the fourth quarter, September, October, and often in October. That's what happened in 2022. Not surprising that happened again here in 2023. So the fourth quarter was all about the October low. And then I would argue the rest of the fourth quarter has been about a dramatic change of character. When you think about those first three quarters, and as a preview, one of our other top 5 charts is going to deal a little bit more with leadership themes, because I think that was an important part of 2023 and your experience as an investor was understanding that leadership. But as we look at the S&P 500, remember the market's changed quite a bit from late October to where we're at now in the month of December. Besides the fact that the market essentially turned on a dime, was making a new low, and I remember at this point I was quite bearish on the markets, and I will tell you why. We were breaking through support. We were breaking down through this key trend line. We broke below the 200-day moving average for the first time since back here in March. The RSI had gotten to a very negative range, and on rallies was not getting above 60 and almost not above 50. So overall, this felt like a very negative market. I don't blame myself for being particularly negative at that point, but it certainly was what I think the weight of the evidence was showing. But in the fourth quarter, I think it was all about that character changing, right? In between the end of October and mid-November, look at all of the signs that things were different. And I think that is one of the big takeaways in 2023 is recognizing and I think respecting the weight of the evidence, but also identifying and admitting when you're wrong. I was taught it's okay to be wrong. It's not okay to stay wrong. So remaining bearish through this period would not have been a great approach. So what changed in the fourth quarter? Well, instead of making new lows, we started making higher lows. Instead of making lower highs, we made a higher high, which was why this sort of move in mid-November, I think, was key, getting us above the October swing high. I drew trend lines off of the September and October highs. I drew trend lines off of the third quarter highs. All of those were completed or were broken by the time we got to mid-November. So by the time we had this gap higher, and that's when the October CPI data was reported, we had this big gap upwards. It was lights out to the upside. And as we rallied off the October low, a lot of things changed. Stocks that had been absolutely beaten down, like banks, like industrial stocks, some materials names, some healthcare names, value-oriented names that have been lagging consistently in the first 3 quarters of the year, all ripped to the upside. Many of them had been oversold, became overbought, and the S&P itself did the same thing. So what you have to remember is overbought conditions in this sort of chart, in this sort of environment, are actually quite bullish, right? Overbought means up a lot, is what I like to tell people. So when we're oversold here in late October, it feels pretty dire. We bounced off of that, but then all of a sudden the RSI pushed well above that 60 level, and I think that breadth thrust, for lack of a better term. In this case, it's more of a momentum thrust to the upside. It's really quite bullish. So by the time we got to that gap higher, I think that was telling you a story of severe strength to the upside. And really, from that point on, we've had brief pauses, but no real pullbacks. And I think the challenge in the fourth quarter for a lot of investors, if you weren't buying back here, you never really had that pullback, right? Besides a brief pause in late November around Thanksgiving, you never really had like a 3 to 5% drop, which would be a high conviction buy on the dips kind of setup. We just haven't had that. Now, I would argue as we think about our 2024 market outlook, which will be coming out in later December, we'll be talking with some experts, and I'll be sharing my outlook as well, thinking about what a pullback might look like in the first quarter, what sort of I think lines in the sand, what sort of guideposts you want to look for to sort of chart that sort of movement. So I think the story of the S&P 500 in 2023 is really about those 4 different quarters, right? January was about a question mark, right? Are we range bound? Are we retesting the lows? The answer is no. Second quarter was all about a resounding uptrend. All of those signs that the momentum was strong, that the trend was strong, that resistance levels were being broken, and we were making higher lows on the way up. The third quarter was all about a market top. Textbooks and technical analysis going forward should have this particular pattern and showing the head and shoulders top, what it means, how it represents a change of character on the chart, how the momentum shifted to more of a bearish range, and why breaking a neckline is an important thing. The fourth quarter was a great reminder to me on using price patterns and the height of those patterns as a way of identifying downside targets, a reminder to recognize when the evidence changes and make sure that you follow the trends when they reverse. I think that November was probably the toughest month, recognizing that the weakness in the end of October was not as bad as you might have thought. Now, as we think through some of the other 4 charts of the year, as we go through the course of this week, and again every day we'll share another of the top 5 charts. I would encourage you to think back to this chart of the S&P 500 and think about what each quarter actually meant. Think about what lessons you learned. Think about what in your toolkit helped you navigate those months, and maybe where you could upgrade things a little bit. The great thing about the Stock Charts platform, as a reminder, you should all be paid members of the Stock Charts platform. Of course, go to stockcharts.com/special for our holiday special today and really through the end of December. But as you think about it, one of the great benefits of a platform like Stock Charts, you have a lot of different tools, a lot of different capabilities, but you don't have to use all of them. You have to use the ones that are going to help you answer those questions most effectively. So as we go through the remainder of the charts, I would think about these quarters one by one and how the picture of the market really changed. Just to finish up this first of our top 5 charts of 2023, if you're looking to set up this kind of chart, and I would encourage you, one of the most important charts, if not the most important chart I have on Stock Charts on my login, is this daily chart of the S&P 500, because I look at it multiple times a day. In my office, I have 3 monitors, and on the right monitor, I usually just have this chart up. If not the dashboard, one of those is usually on that screen. I'm always glancing over, just thinking about where we're at relative to where we've been. I think that's one of the main assessments you can make. To set up this chart, first you want to make sure you set up a chart list. So what you want to do is go to your dashboard and go to chart lists on the right. I have a bunch of these. You may have very, very few. Click on new and make sure you have like a go-to list. I would encourage you to have a list called like a morning coffee routine, key charts, major benchmarks, whatever it is, a list of charts that you're going to review often and have readily available because they're the most important charts that you're going to review. The way that I set this up with all the annotations, and I was taught, treat your charts not as paintings, but as workbooks, as notebooks, right? So a chart is not something that you print out and hang on the wall, although you can do that, and I've done that at home. It's actually quite beautiful if you do it right. But a chart that you're using on Stock Charts should really be an ongoing conversation that you have with the markets, and that's what I think of when I have this daily chart of the S&P 500. This is something I look at all the time. This is me and the markets having a chat about what they're telling me in terms of the evidence of price and momentum. This is what I am telling the markets in terms of my positioning and my outlook. And we will often agree, and sometimes we won't. And that's the conversation that you need to have. To set this up, I'm using the annotations engine heavily. And one of the tricks that I will show you, and this is an Arthur Hill trick, thanks again to Art years ago showing me as I was trying to learn the Stock Charts platform. He's a power user, and he showed me how to do these support and resistance ranges. If you go here, the horizontal line is something that I use sometimes. That's how you just put like a line on the chart. And that's not bad. If you're going to use nothing else, that's probably pretty good. But he turned me on to this idea of doing a range, right? So you do a rectangle. You can do some really cool things like rounding the corners and making the lines different widths and stuff. But what you want to do is click here, get the color that you want, and then drag this little slider to the left, and that makes these shaded areas. And I will tell you, that was a life changer for me charting wise, because I was always so used to doing specific levels and thinking there's this precision. The S&P hits 4,600 and not a penny more, and that's the most important level. Talking with Art about how he used the annotations, it made me realize it was a much more beautiful way of illustrating support and resistance ranges. I think when something hits a particular level, it is not a precise point. We can go over and under because the markets will often overshoot and undershoot those levels. So by using ranges, using the rectangle tool, and really thinking of them as more ranges to be considered going forward, I think that's a much more nuanced and much more beautiful way of representing the reality of support and resistance here in 2023. There we go. That is your first of the top 5 charts of 2023. I hope you enjoyed this one. And our goal with this series is to sort of highlight some of the key market themes of this year, show you how you can use a platform like StockCharts.com to really better understand the markets and improve what I call your situational awareness, your understanding about what's happening around you as an investor. Before you leave, don't forget to like this video and subscribe to our channel. We've had a fantastic year growing Stock Charts TV. We have a lot of great plans in the new year for this show, The Final Bar, and other programming on Stock Charts TV. So make sure you're part of that journey. Subscribe to the channel. And don't forget to go to StockCharts.com/special for a holiday special. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a great holiday.